When I bought my first home, I wanted a new house. I was new in the real estate business and didn't have enough taxable income to qualify. And I thought I'd try a stated income loan with 20% down. That was back when you could get that kind of loan. However, I didn't have the 20% down payment. Fortunately, my in-laws gifted us the money. And just like that, we were in a new home. On today's show, we'll talk about 5 down payment myths you should stop believing right now. Hello, I'm Jeff Moss, and welcome to All the Right Moves. If you've been thinking about buying a home, the thought of a large down payment can be scary. And that's for good reason. According to NerdWallet, 44% of hopeful buyers say the lack of a down payment was the reason they did not buy a home. Separating fact from fiction can go a long way. And here's the truth you need to know. Myth number 1, you need 20% down. While that was once true, it's not been true for decades. FHA loans only require 3.5% down. If either you or your spouse served in the military, you're likely to be eligible for VA benefits, which can be approved for 0% down. And the same goes for the USDA loans. And if you're a qualified buyer, you can get approved for a conventional loan with 3% down. But there is a catch. You'll be on the hook for private mortgage insurance, or PMI. Myth number 2. Paying mortgage insurance is smarter than paying a bigger down payment. In most cases, PMI is a necessity, or you'd never save enough to buy a house. But you need to count the cost. It might not be a big deal, but you'll want to calculate what you'll pay in the long run. Take, for example, conventional loans. If you put less than 20% down, you'll get stuck with PMI, but only until the principal balance reaches 78% or less of the original purchase price. FHA loans require mortgage insurance for the life of the loan. Myth number 3, cash is king. There's some truth to this belief. Cash offers have one big benefit to a seller. They're guaranteed to close on time with no loan approval hiccups. But on the flip side, this myth assumes that sellers want a quick close of escrow, but that's not always true. Often, if you make the highest priced offer or you write a killer personal letter that resonates with the seller, you stand a better chance of getting approved over an all-cash offer. Myth number 4, down payment assistance is easy. It's not easy and it requires more paperwork, but it may be worth the effort. Talk over your options with your loan officer. Myth number 5, you can take out a loan for a down payment. This one is mostly a myth. You can borrow money for a down payment, but you have to use property you already own as collateral. And that'd be like a car or a similar item. Really, it's going to be a gift, and the gift must come from a family member. There's extra paperwork and must be a real gift, not a loan. And it's a common way to obtain a down payment. Don't be afraid to consider it. Now, thanks to Realtor.com and Angela Cawley for this material. And on that almost plagiarism note, that's it for our show. Thanks for watching. We'll see you next time on All the Right Moves with Jeff Moss.